What do you make of the enthusiastic share price reaction?
So I think in the context of what you guys just discussed, it makes a lot of sense. Because what we learned with Apple numbers last night is that like the macro environment is bad, but not that bad. You look at the iPhone sales for Apple, they are down almost $5 billion. It's more than 20% down year on year. That means iPhone revenues are down $4 billion, but overall iPhone revenues are down $10 billion. So there is something that goes beyond China that's happening at Apple. And what I see in these numbers is actually two things. One is iPhone users still love their phone, but they stick to them longer. So refresh rates are elongating. And the second one is simply that last year the iPhone X was extremely successful, and a lot of people went for that phone and are not in the market this year anymore. And then all that accounts, I think, for 80% of the disappointment at Apple, and the macro is only 20%.
Jim, did they convince Wall Street to move past release of iPhone shipments? Everybody was outraged when they said they weren't going to disclose that last quarter. They didn't, and the stock is doing pretty well. So is Wall Street buying that narrative?
Well, a big part of it is simply the results were not as bad as feared. People were expecting very bad results. Remember, they pre-announced negative. The first time in over 11 years since the entire existence of the iPhone on January 3rd. So people were expecting a very bad March quarter guidance, and it was more seasonal, so it wasn't as bad. Covering up the iPhone units, simply we view that companies like to highlight when things are going well, and when they're not going well, they like to shift the focus. And right now, Apple is trying to shift the focus to its services, which are highly profitable. But again, we do not believe Apple is a service company. It's a product company with great services.
All right, so given that then, Jim, are services really still linked to unit growth overall and not to the organic growth of the services ecosystem?
They are absolutely linked, but not directly dollar for dollar. What I mean by that is people's wallet share are spending more money on apps and in-game purchasing today. Look, when we were all children, we would spend money on bicycles and things like that. Today, people are spending more money on apps and in purchasing things, and they're doing it more through their smartphone, whether it be Android or the Apple ecosystem. So the wallet share is increasing. Services can continue to grow faster than iPhone units because, in fact, iPhone units were down year over year, and we expect them to be down year over year for the next several quarters, and services are still growing. But it would be disrespectful or dismissive to simply say Apple should be valued a lot higher based upon services only. You cannot buy just the Apple services without also having a adoption of the company's products. The company needs more innovation with its products to keep these services growing.